Higher interest rates, lower interest rates, which is the better scenario for you?
Well, we managed to increase our revenue in both scenarios. So when interest rates were going down, but also when they're going up. Having a large chunk of consumer finance activity, which is very much geared into falling interest rates, when it comes to an environment with lower interest rates, we will start to print again NII growth, and hence also the activity of investment banking and in general wealth management will benefit from a lower interest rate environment. So we see tailwind in the second part of the year supported by the macro.
You've also mentioned that M&A has been a growth driver. Just flesh out what we're seeing in that part of the business, because last year, the last 12 months, it felt as though there were a few deals, but in recent months, we've seen a little bit more appetite for some deal making.
Yeah, for us, of course, M&A is important for the activity in investment banking for clients, but it is also important the M&A we do for us as a way to increase our organic growth trajectory. For clients, we have seen a pickup of discussion in M&A, also large M&A in the last part of last year. So we do expect that this is a trend normalizing, going back to normality during the course of 2024, starting with mid-cap deal, but going also to large cap deal. And as soon as interest rates will stabilize and go into the downside trajectory, we see a pickup of activity also with financial sponsors. So overall, I think is an improving outlook in 2024 compared to 2023. As far as M&A for us, as you've seen, we have concluded strategic partnership with Arma Partners, which is a very nice platform of advisory in digital economy based in London. And we have also bought a buy now, pay later operator in Switzerland. So M&A for us is a tool to accelerate the growth of the group.
Alberto, lovely to see you, sir. Thank you for joining us. Let me change the question. Every single bank that I've spoken to and Karen has spoken to, we've pretty much spoken to every senior banker in Europe over the last 6 weeks. Everybody is looking to expand their wealth management visions. I don't see how you all can do it, sir. Is there going to be an issue here where at some stage pricing for clients becomes much more aggressive and actually the profitability isn't quite what you hoped it would be?
Look, you are right. Everybody wants to expand wealth management, but if we, focus on Italy, we then focus on one of the most interesting saving market in Europe in terms of size. Think about the size is 5 trillion euro of dimension, and basically it's a country where our brand is very well known. So basically, using our brand and also our proximity to family-owned business, we think that leveraging on Mediobanca Premier, which is our newest project, so we cover two segments, the private one, which is above 10 million of portfolio, and below 10 million with the Mediobanca Premier. We just launched in January as a new brand and a new entity. I think we will have a very, very important growth, and we will have such a differentiating factor focusing on Italy, of course. So we are not talking about becoming a wealth manager in all countries in Europe, but we start from Italy where we are more credible and we have all possibility to grow more than some competitors.
Yeah, and I get it. And it's very interesting that, again, the same CEOs we've spoken to, Alberto, have told us, yeah, we're going to keep to our home market. Cross-border, it ain't working for us for all kinds of structural reasons in Europe as well. But the thing is, when we talk to you, I hear the same thing from Mr. Messina and I hear the same thing from Mr. Orcel as well. You know them both very well. They both want the same lunch that you want as well. We can't all have a unique proposition.
Well, but the market is very big. Think about this. 60% of the 5 trillion that I mentioned are not managed, are unmanaged. So in differentiating business model, something offered by commercial bank, service offered by commercial bank, at the end can hardly compete with specialized operator that they put more money into investment in digital, in recruiting good people, in offering IB product. So at the end, if you put all this together, there are few winners and more losers. We hope to be among the few winners, of course.
Alberto, speaking of winners and losers, let me ask you about the capital markets bill we've been talking about all week, which is meant to increase the voting rights of large shareholders, but at the same time potentially encourage more companies, family-owned companies, to list on the stock market. Does this bolster your ability to have more of a say in terms of the future of some companies? How do you see this bill playing out?
I think this measure of, increasing voting rights or loyalty shares or double voting rights, I think it's something that we have seen spreading around. We have seen some company going to Netherlands because of this. And so basically, if it is done with the approval of the large majority of shareholders, it's something that we see favorably. And this is the way it has been introduced. It's still difficult to understand how many companies can go back to Italy to have the headquarters because of this law. We will see. Basically, it's more important that there is a positive environment for IPOs. We are now working in the number of interesting IPOs, but still the market, as you know, international market for IPOs, I shouldn't say is closed, but it's still difficult because we have seen that a lot of IPOs recently have been pulled. So I think the framework, the rule framework is important, but it's more important the tone of the market and the appetite of investors for IPOs.
Alberto, great to hear your thoughts on that. Thank you very much for joining us and also on the back of numbers. Alberto Nagel with us, the CEO of Mediobanca. Skanska's fourth quarter profit takes a hit amid a write-down on property valuation.